Greetings, everybody. Welcome to Liberty Call. Today is Friday. Woo! April 12th, 2024. Got an anniversary tomorrow. 28 years I've been married. Can you believe that some fool would be married to this idiot for 28 years? Well, I mean, doesn't say much about her since, she married me. Anyways, love you, Leslie. She's driving back from the airport, so she can't hear me right now. Anyways, all right. Well, looks like a pretty ugly day in the markets and, and just across the globe, it seems like. So anyways, if it is your first time watching Liberty Call, if you could give me some thumbs up, a like, share, subscribe, follow, and press that notification bell. All right, let's get into today's numbers. Let's get that off the screen. All right, Dow Jones down 1.24%, 475 points, closed at 37,983. The S&P 500 down 1.42%, closed at 5125. NASDAQ down 1.62%, closed at 16,175. The VIX was up 16.1% today. It's at 1731. Canada down 0.95, Brazil down 1.18, and Mexico down 0.46. So that was all of the Americas. It was pretty ugly here. Heading over to Europe, Germany was down 0.28, the UK up 0.91, France down 0.16, the Netherlands down 0.04, Spain up 0.34, Italy up 0.15, Switzerland down 0.75%, and Portugal up 0.65%. Russian exchanges both green today. The MOEX up 0.52, the RTSI up 0.3. And the Asian markets, the Nikkei in Japan was up 0.31%, Australia down a third, New Zealand down 0.12%. In China, the Shanghai was down 0.49%, the Shenzhen Component down 0.78%, China A50 down 0.86%, DJ Shanghai down 0.6%, Hang Seng down 2.18%, and the Taiwan weighted was down 0.08. So looks like most things today, well, across the globe, starting very early this morning in Asia, just a mess. All right, let me bring up, where is it? There it is. All right, let's bring up the chart for the week and see how everything did. Let's bring this in a little. All right, starting out with the Dow Jones. Looks like it's going to finish the week down about 2.35%. The S&P 500. Oh, there it is. It's going to finish the day down, or the week down 1.61. The NASDAQ will finish the day off down about the week down about 0.52. The Dow Utilities down about 1.73, and the Dow Transports down 2.81%. So across the board, it was just an ugly week here for the market. So, not shocking, not really surprising that, knowing what's been going on in the world, this is not a shock to me at all. So, all righty, let's get into the economic data that came out this week. Initial jobless claims came in at 211,000, better than the forecast of 216. Last week's number was 222,000. Continuing claims came in at 1.817 million. Forecast was 1.8. And last week's number was 1.789. So we did go up about 20 or 18,000. So not too bad there. The NFIB Small Business Optimism Index came in at 88.5. I think that was like the lowest it's been in forever. Forecast was 88.8. Previous number was 89.4. And you can see it's just been the last 5 years been trending down, down, down. We zoom out even more. Looks like it peaked out at about 2018. It's just been heading in a downward trend since. So that's not great. Year over year, consumer price inflation went up by 3.5%. The forecast was 3.4. Last month's number was a 3.2. On a month-on-month basis, it grew by 0.4%. Forecast was 0.3. Last month's number was also a 0.4. Producer price index grew at a 2.1% pace. The forecast was 2.2, and the last month's number was 1.6%. Month on month, it grew by 0.2%. The forecast was 0.3. Last month's number was a 0.6. And last of the data this week, U.S. consumer sentiments came in at 77.9. Forecast was a 79, and the last month's number was a 79.4. So did dip a little bit from the last month, but if you look at the previous months, we're kind of in that same trend we've been in for a while. All right, so that's that. Let's bring up our market recap. U.S. stocks slump as big bank earnings disappoint. Inflation jitters are persisting. That's not ideal. All right. U.S. stocks experienced a decline on Friday as major Wall Street banks initiated the earnings season with disappointing results, intensifying concerns about the forthcoming earnings period amid lingering worries about inflation. JP Morgan Chase saw its stock drop over 5% after projecting full-year interest income below expectations, reflecting anticipation of Federal Reserve rate cuts. Wells Fargo also faced a decline of 0.4% despite surpassing revenue expectations due to lower than anticipated net interest income figures. Citi reported better than expected quarterly results but witnessed a more than 2% decline, signaling ongoing concerns despite signs of improvement in its turnaround effects. The performance of the banking sector is often indicative of the broader economic strength, and uncertainties surrounding the Fed's interest rate trajectory are expected to overshadow the first quarter earnings season. Analysts anticipate a 5% increase in S&P 500 company earnings for the first quarter, marking a notable decline from the 10.1% growth recorded in the previous quarter. Additionally, Roku shares fell by 2.8% following a discovery of a second cyber attack affecting approximately 576,000 accounts, while Zoetis Inc. experienced an almost 8% decline amid reports of complaints from pet owners regarding side effects of the company's arthritis drugs. Concerns about inflation persisted, with the Michigan Consumer Sentiment Index dropping in April and inflation expectations rising for both the short and the long term. This comes amidst anticipation of remarks from Fed speakers, including Bostic and Daly, as investors seek clarity on the central bank's future interest rate decisions. Crude oil prices rose on Friday due to elevated geopolitical risks, particularly in the Middle East. Despite this, concerns over U.S. monetary policy led to weekly losses in crude prices. U.S. officials anticipated potential retaliatory actions from Iran against Israel, although Iran expressed intentions to respond in a calibrated manner, indicating a desire to avoid escalating tensions further in the region. Yeah, right. They're both bad guys. I'm not going to defend either side. They're both jerks to each other, and the Israelis and the Zionists treat their neighbors like crap. Iran, for some reason, doesn't like Israel. I don't know. I'm not Jewish. Frankly, I don't care. I just am tired of funding it personally. All right. Last up, we got an article here from Zero Hedge titled "Sound Money versus Fiat Currency: Trade and Credit Are the Wild Cards." So let's see. And this was written by Charles Hughes of twomindsblog.com .blog, whatever. All right. In his article of Two Minds, Charles Hughes Smith challenges conventional monetary systems and proposes thinking beyond the existing frameworks, which he argues have inherent flaws and no viable solutions. I'm not going to argue with that. He discusses various monetary ideologies, from fiat currency to sound money like gold or Bitcoin, and debt-free currencies like modern monetary theory. That's a disaster. Look into that. It's basically just moving the decimal point around, trying to get out, pay off debts, and then it just, all you do is inflate and deflate the currency, and highlights their shortcomings. Smith delves into the role of credit in monetary systems, tracing its historical significance in facilitating commerce and state revenues. He explains how credit, both short and long term, has been integral to economies throughout history, shaping the availability of money and influencing economic dynamics. Examining the limitations of gold-backed money, Smith illustrates how credit expansion dilutes the value of gold-backed currency, leading to Gresham's law, where bad money drives good money out of circulation. He also emphasizes the impact of trade imbalances on monetary systems, citing historical examples such as ancient Rome and the Nixon shock. Smith argues that the relative value of currencies, commodities, and labor is determined by global markets, challenging the notion of anchoring prices through monetary policies. He criticizes fiat currencies for their susceptibility to inflationary pressures and debt-driven economic models, which he believes lead to wealth concentration and economic stagnation. In proposing alternatives, Smith advocates for a fundamental shift in how money is created and distributed. He suggests a system that generates new money at the bottom of the wealth power pyramid, diverging from the traditional top-down approach. While acknowledging the impracticality of such ideas within the current paradigm, he contends that exploring alternative monetary frameworks is necessary given the inherent limitations of existing systems. Drawing from his previous works, including Money and Work Unchained and a radically beneficial world, Smith encourages reimagining monetary systems to address their intrinsic flaws and create a more equitable economic structures. He concludes that while unconventional ideas may face resistance, they offer potential pathways to navigate the shortcomings of the status quo. And probably true. I mean, if we couldn't, monkey with the monetary system and inflate and the money supply every time we hit some sort of a little roadblock, we'd be in a much better spot. And because if you look back from, say, 1800 to 1900, there was very little inflation in at least here in America. And the same, well, not the same because they'd be a little slightly different over 100 years, but a pair of leather shoes in 1800 would probably be similar in cost in, ounces of gold in the year 1900, and probably the same in ounces of gold today. But, of course, gold used to be $30, $35 an ounce for like forever. And then, Nixon or first FDR confiscated the gold, and Nixon took us off the gold exchange window. And since then, I mean, what's gold trading at? I had the chart up here earlier. Gold is trading at 23.44 as of right now. It dropped a bit this afternoon, but so went from $35 to $2,300. So your dollar in value went all the way down. So anyways, all right. Well, that was everything that I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope everyone out there has a wonderful weekend, and I shall talk to you next time. Adios. Here we go.